Have you ever felt like you're on a treadmill? You know, you're running faster and faster, but that finish line, financial stability, it just seems to be getting further and further away. It's a feeling a lot of us are having, and in this explainer, we're going to break down exactly why.
It usually starts as just a quiet thought, right? You look at your own life, you look at your friends and family, and you start to see a pattern, a real disconnect between all the effort everyone's putting in and the rewards they're actually seeing.
And I mean, the effort is just, it's undeniable. People are more educated, more skilled, and frankly working harder than ever before. We're all juggling degrees, side hustles, constant upskilling. The output is massive.
And yet, despite all that work, achieving the kind of stability that once felt pretty standard, you know, owning a home, building up some real savings, it feels like you're trying to build a bridge with a toy hammer. There's this huge, frustrating gap between the energy we're all putting out and the actual progress we're making.
So this is really the big question we're digging into. Is this some kind of personal failing happening to millions of people at once? Or have the fundamental rules of the economic game just been completely rewritten right under our feet?
To really understand what's happening now, we have to rewind a bit and look at the formula for success that most of us were taught. For generations, the path forward seemed pretty clear, pretty reliable.
This was the deal, right? The social contract. Step 1, you work hard. Your input was directly tied to your output. Step 2, you get promoted. There was a clear ladder to climb. Step 3, you earn more, as your wages grew with your experience. And all of that led to Step 4, you built stability. It was predictable, almost like a straight line.
Now, here's the crucial part. That formula didn't just work by magic. It worked because the whole economic environment supported it. We're talking about strong wage growth that actually beat inflation, stable industries, and major costs like housing and education that were actually attainable on a regular salary. Effort translated into security because those foundational pillars were solid. But those pillars have basically crumbled.
And this brings us to the core idea that defines our modern economy. It's a concept that economists call the Great Decoupling. And it really represents a fundamental break from the past, a severing of that link we all just took for granted.
So in plain English, what does that mean? It means that even as companies are getting more and more productive and profits are soaring, thanks to technology and globalization, that value is just not being shared with the workforce in the same way it used to be. The chain that once linked a growing economy to growing wages for workers, well, that chain has been broken.
And this isn't just some abstract theory. You can see it right here in the data. Corporate profits as a share of the whole economy are surging toward record highs. At the exact same time, labor's share of that same economic pie has plummeted to its lowest level since the 1940s. The two lines have literally decoupled and gone in opposite directions.
And this quote, it just nails the dynamic perfectly. When you hear about AI driving efficiency, this is the unspoken reality. It's not just about making one person more productive. It's often about needing fewer people to produce the same amount of value, or even more.
So this decoupling has created two very, very different paths for making money. And understanding this split is absolutely key to understanding the new economy.
On one side, you've got labor income. That's what you earn by trading your time and your skills for a paycheck. And this path, it often feels capped, right? There's a limit. But on the other side, you have asset income. This is money you earn from things you own, like stocks, property, or a business. This kind of income compounds, and it works for you, even when you're not actively working. And in our world of AI and automation, the returns to owning assets are just dramatically outpacing the returns to labor. And hey, this isn't just theoretical. A recent study of gig workers on Upwork found that the real hourly earnings for jobs like writing and coding fell by 23% in the 6 months right after ChatGPT came out. AI directly repriced the value of that human labor, pushing it down.
Okay, so if the old model was a straight, linear path, today's model is, well, it's nonlinear. We live in a leverage economy where the whole relationship between the effort you put in and the reward you get out has fundamentally changed. Think about it like this. Two people can work equally hard, putting in the same hours, same intensity. But the person who has leverage, the one who owns a piece of the capital, has access to the right network, or has a really scarce skill, they're going to see their effort multiplied exponentially. Hard work is still the engine, for sure, but leverage is the turbocharger. Now, to add another complicated layer to all of this, you've got the psychological impact of social media. Our perception of what normal progress even looks like has been completely warped. We are just constantly bombarded with the hyper-successful outliers, the stories of these massive leveraged wins. It's called survivorship bias. What we don't see are the thousands of failures behind everyone's success, the huge risks people took, the lucky breaks. And this creates this distorted view that makes our own steady, linear progress feel like we're failing.
So if the old formula is broken and our perception is all skewed, what is the new formula for this new economic era? Well, it's not about abandoning hard work. It's about strategically pairing it with other really important elements.
Hard work is still the foundation. It's what builds your skills, your reputation, and opens doors. But on its own, it's not enough anymore to create that compounding growth. The modern formula requires adding layers. You need to add a rare, valuable skill. Then you add leverage, like code, media, or capital, to multiply your effort. And finally, you add ownership, so you can actually capture a piece of the value you help create.
You can think of it like a chemical reaction. You need all of these elements to create compounding growth. Hard work without skill is just aimless. Skill without leverage is capped. And leverage without ownership can be taken away from you. They all have to work together.
So let's be crystal clear about this. This is not a story about how hard work doesn't matter anymore. It matters more than ever. But it's kind of like being an incredibly skilled pawn in a chess game where the rules have suddenly changed. You have to learn how the other pieces move now.
These are the attributes that the new system values most. The ability to multiply your efforts through leverage, the flexibility to adapt to rapid change, the security that comes from ownership, and the value of having a skill that is both rare and works well with new technology. And this is the final and most crucial takeaway. If you feel like you're working harder and harder just to stay in the same place, the solution might not be more intensity. It might be a change in direction. The most important strategic question you can ask yourself today isn't, how can I work harder? It's, what am I building? What am I creating? And ultimately, what piece of the future am I trying to own?